So Mr. Joshi essentially talking about the fact that it's in line with expectations. 10 rupee dividend also has been declared. Rucha, anything else that you're picking up at the moment?
So yeah, 10 rupees dividends seem to be pretty much in line with what the companies has been expecting. But as rightly Mr. Mayuresh also mentioned about how BFSI is important for the company, which contributes majority of the revenue. A positive growth, in fact, over here gives stability in deal wins not getting cancelled idly, which was the case with TCS in the last quarter. And even in the third quarter, which the company had mentioned about deal cancellations, and the demand was they were not sure about how the demand was getting through, talking about deal pauses, etc., not seeing green shoots. Well, Wipro was the only one who was seeing the green shoots, but none of the companies were seeing green shoots. But we have TCS numbers in line, margins in line. Of course, margin dip was already baked in the numbers due to the wage hike, but definitely commentary from the management is what to be watched out for, at 7 o'clock today.
Oh yes, absolutely. Net profit down 3.2%. Quarter on quarter is what we are picking up as well. Anything that you'd like to add on that?
Yes, so net profit, as I mentioned about the wage hike, was baked in, but I think, you know, this was all already baked in the numbers. But as I would, as an investor, look forward for what are the comments from the management coming by. But we also have our guest who is joining back, sir. You're talking about BFSI when we lastly got disconnected. Mr. Mayuresh, over to you.
Yeah, so I think that's one important aspect and domain that TCS commentary will hold key, not just for TCS, but for the entire sector as a whole, because a lot of revenue contribution comes in from the BFSI space, specifically for the larger players as well. And therefore, what happens in terms of a recovery mechanism for this sector, specifically in the North American market, the European region as well, is going to be extremely critical. At the same time, retail, manufacturing are also the other sub-segments or segments where the growth patterns and how discretionary demand, specifically from the client side, is expected to come back, is going to be critical in terms of how the second half earnings will get positioned. First half is largely a mix in terms of a hit on the EBIT margins, both in terms of a slow recovery that was anyway expected for all of these sectors, and probably taking a toll in terms of margins, at least as far as Q1, Q2 is concerned. So I think commentary across these spaces is going to be extremely critical for TCS in terms of business.
Sure, sir, got that. But we also have Rahul Jain from Daulat Capital joining us, who closely tracks the IT sector. Hi, sir, welcome to the show. And what are your takes on the IT earnings?
Yeah, of course. To begin with, from a growth perspective, it's slightly better than what we were thinking of, and that's encouraging. And it's also supported by a headcount addition, which is an important metric that we need to follow right now from a going forward perspective. This number per se would kind of set them well for the better than last year kind of a growth outlook that they shared. So from that perspective, we would say we are fine so far, but would see what they have to comment in terms of overall thought process.
Right, Jen, do you think that this perhaps is going to signal the uptick in the IT sector?
I think it would be too early to think like that. I mean, we just heard a call 3 weeks back, and they were, despite suggesting a better outlook in terms of the deal win that they signed in that quarter, they were very clear that this is not that the environment has changed much. Let's assume if we hear process from we would be glad that things are bottoming out, but is it like a swift recovery which we are going to see from here on? Could be too premature to think on.
Sure, sir. Talking about the earnings cycle, what would be your estimates on the company? Likely downgrade in the earnings estimates that your company has for TCS?